This was great.
Yeah.
So guys, as you can see on the screen, these are actual units that we actually acquired. This is over 600 units and we took them down in phases. So we actually had this side right here where you see it on the right, and then over on the other side towards the left of those tennis courts, over to the left, we own that side as well. And this property, this is an amazing property. These were low income tax credit properties where we did great value add, and it was really simple. We did renovations in the day. Have you ever seen a renovation done in a day? Like that's, I don't know if you know, but that could be really, really challenging for a lot of people because some people can't do a turnover in 1 week in less than a day. We did it in a day, and literally in one day we took the value of a prop unit from only collecting $800 to $1,200, $1,500, $1,800 in a day. Like those are the great things that we do at the Lion Capital. Again, investor qualifications is 25,000. We are doing accredited and non-accredited investors, and the typical split is 70-30 for this fund. 30% goes to the GP and 70% to the LP, the limited partner, which would be you. That 70% is inclusive of overall net cash flow, any debt that we lend on the money, any refinances or net proceeds from the sale. Our group has done over $2 billion worth of real estate transaction and management, hotels and apartments. But we're looking to bring in new opportunities for people that's new to real estate and also have a lot of great experience. Typical returns we look for are 14 to 16% IRR, internal rate of returns. The goal is to almost double our investors' money. So if we believe this could bring a 1.8 to 2.3 equity multiple, meaning the one means 100% of your money, then the point means you'll get 80% of your money. So if it's 2.3, that means you'll get 230% return on your money. Anybody would like that kind of return? If you like those kind of returns, just type in the chat me. All right, and we're looking to get at least a 6 to 8% cash on cash, and that's just starting. But as the project grows, the REIT grows, we will continue to do more deals that increase the net cash flow. Our mission is to increase the wealth of not only students, investors. I shared this yesterday, but guys, realize over 11,000 people are retiring every day, but only 1,000 have enough to retire. So that means 10,000 people every day, 70,000 a week, 280,000, almost 300,000 a month don't have enough money to retire. Right? I can go on and on. That's like 3.6 million people every year retiring don't have enough money. Are you going to let that be you? Well, it doesn't have to be you because you can literally change that now by beginning to invest and understand how your investment works. And this is a great opportunity for you to do that. We're highly selective. This is our process. You know, there's progress in the process, and this is our process. We're highly selective of what we're doing. We only look for tier 1, tier 2 cities. Like we like to find properties in the pocket. And what I mean by in the pocket, like tier 1 is like, you know, LA, Miami, like those are no brainers, right? I don't necessarily want to buy in Miami. I mean, I would love Miami. I would love LA, but you know, that's really not cost efficient. So you kind of buy in like smaller cities like Cincinnati, which will be a tier 2 city, Philadelphia, areas like that. And then you find in these pockets where these are undervalued. Like that one I showed you at the very beginning, that was a low income tax credit. And we were able to push rents from literally in one day, we turned the unit and pushed the rents from $800 to $1,400, $1,600, $1,800. Like those are an amazing return. And we form strategic joint ventures to make this happen. Sometimes it's all me, sometimes it's my other partners. Sometimes we have great management that brings us deals. So we always got a pipeline of deals coming in. Some deals we like, we'll buy stabilized assets if we feel that we can create more value. We'll reposition an existing building as well. We'll go nationwide, but we really want to focus on the Sun Belt. Now, naturally, I'm from Cincinnati, Ohio. Everybody knows about the Nasty 90. We do a lot of great deals here. But if we can do deals in the Midwest in this area, we'll do it. But we really like the Sun Belt because you kind of get the best of both worlds, right? Because like in LA, New York, like you can probably pay a premium for an asset, but it'll increase rapidly with appreciation. The problem is you can't really cash flow the property during that time that you're holding it and you're trying to stabilize. A lot of properties in LA, if you can't do an ADU, additional dwelling unit, and add to it, you may have negative cash flow the 1 to 5 years you're holding the property, but you're getting so much appreciation it doesn't matter, right? So there's different strategies that you do, and we target some development projects as well. We'll be targeting properties from anywhere from 500 to 15 million. Because those are sweet spots we can really manage. Like now, I do have $100 million project now I'm working on. That's actually a part of the REIT that it can be a part of it as well. And we also lend private money on these deals that actually brings in cash flow for the REIT while it's waiting for a project. All right. Here's some of the team here, and these are people I work with. That's myself. I got Tim Vest, and Tim Vest has been in real estate for quite some time and has over 1,800 units. John Castman has done now he's out of over 100 million in multifamily as well. And I myself have done over 300 million in hotels and apartments. Um, our experience in partnerships. Nassau was founded in 2006. Cumulative 39 years experience, 39 years with apartments, over 100 years with hotels. We're scaling. I've done over 1,000, 1,500, 2,000 units. Managed over 5,000 hotel rooms. And the great thing we pride ourselves is none of our investors has lost any of their cash working with us. Now, I'm not saying we never did a challenging deal, but we pride ourselves on making sure that we get our investors' money back, their principal and their returns. And so we're looking to get great returns of 15 to 20%. Here's one of the properties that we did. This is a smaller one, but this is one we did not too long ago. We did a full cycle on. And look at this. Like, here's before. You can see the cabinets are old. Then we put in these new cabinets, put in new flooring. Um, we actually worked on this deal to acquire. It took us like 3, 4, a year, maybe 2 years to buy it. Like we were very consistent. And some of you like, I'm just asking it. Look, would any of you like call somebody once or twice a month for 2 years to get a deal? Like, do we got anybody that runs to rejection? Anybody runs to no? Well, you should listen. You should have some no goals, not no goals, but no goals, like no goals, right? And the reason I say that because of our no goals, we stayed on this person consistently, and he sold it to us for 25,000 a door. We put 10,000 a door in it, and we were all in for 35,000 a door, and we sold it for 75,000 a door. All right, so we had a net profit of 30,000 a door. So guys, what does that mean? Well, 30,000 a door times 28, see, 30,000 a door times 128. We had just shy of a $4 million profit. Let me ask you, was that worth going for rejections and getting multiple no's until we got our yes? If you believe that, type in the chat yes. I mean, I think we actually did more than that. I'm being conservative, but like the IRR was 41%, the equity multiple was 4.4, and I don't even think we held that for 5 years. I think that was a 3-year hold, and that was in a pocket in the C neighborhood. All right. Here's another one that we did. It was a 42 unit. We held it for about 3 years. This wasn't really bad. This was an out of town investor. He was kind of struggling on, manage it from New Jersey. And so we ended up buying the property. We did some light renovations, put some carpet in, paint, and We didn't do an overhaul unless it really needed, but we kind of changed the flooring in some of the bathrooms. It had windows, but we did put a roof in, did landscaping. And this thing here, we bought for 1.4, basically 1.3. We're all in for 1.6, and we sold it for 3.5 million. So another great return. During the holding period, we did like 8.5 cash on cash, 3-year hold, 52% IRR, like ridiculous return. Like, are those deals still out there? It's getting more challenging, it's getting more competitive, but we still finding deals, right? Here's our hotel. This is actually the hotel renovated. This is our Marriott Courtyard, which we just finished renovating this. Um, we're all in for 7 million. Well, we acquired it for 7 million with debt and pace. We're all in for 10. Hotel's worth 14, could be worth 17. We're now in the stabilization period and having amazing returns. I shared with you yesterday the Stay Bridge and the Hampton Inn, but I'm just sharing with you the type of properties that we in here that you can get great cash flow. And this is actually a property that we had in the portfolio full of REIT, and it's kicking off 8% cash on cash to investor, and they just collecting a check every month. So if you would like to be a part of something where some deals you'll get equity and debt, and then some in the merger of the REIT you'll get debt and equity. So you're getting a great combination here that as soon as you get in, you can start getting returns on the deal. Again, this is the Lion Capital Fund, and I'm sharing. I just have to put these disclosures. But here's my information. But we have Vestor that you guys can go to learn more about being a part of this deal. And if you sign up today, um, and you have everything in by June 30th, we're giving away, you can get one of these free Broke the Million t-shirts. Is that, yeah, that's there. Or my BHAGs, Big Hair Audacious Gold t-shirt. And I'm giving a free stay. If you're ever in Columbus or Indianapolis or Oklahoma, you can get a free stay at my hotel. Or I will just send you a discount for whatever hotel you want to stay at. I'll give you out one pass that should give you a great discount for a Hilton or a Marriott branded hotel. Doesn't matter. If you want to stay at the Ritz and they got a discount that day, you can take it. And just to give you an idea, sometimes I get to stay at hotels. Like I stayed at a Ritz that's normally $1,000 a night. I stay there for like $100. And when I go to Tampa, I stay at this place called the Edition. It's normally $400 or $500. I stay there for $150. So a lot of great opportunities. So now I'm going to sit back. That's our project, and I'm going to take any questions you may have regarding this Lion Capital and taking shares.
I put the link in the chat for those who want to review the pitch deck or if they want to invest. So I put the link in the chat, and then you can also ask any questions you might have on the Vestor portal. No question. I guess everybody going to invest, Mike.
There you go. There's no doubt. So
there we go.
Thank you guys for this opportunity. I apologize again. We had issues with the computer, but we will definitely take care of you.
Can't have a Zoom call without a dog, baby. You good?
Yeah, like man, I got people knocking at the door, and like this is live. This is what you get when you don't go to your office. I thought I was being clear because I didn't have any kids today. So, yeah, please go to Vestor today, right now. Sign
wait a minute, we got a question. Can you?
Yep, I'll answer that.
So the difference between the general partner and the LP benefits, anybody who invests through Vestor, you're going to come in as a limited partner? And so a limited partner is someone who won't have any risk. They'll have a common stock. And Mike would be the general partner of the Lion Fund. And then LP will come in, and you don't have to take as much risk. Mike is the one that's doing pretty much all the legwork. The question was, Mike, can you elaborate a little bit more on GP versus the LP benefit? So that's what I just got finished answering.
Yeah, I mean, the bottom line is just look at this. The LP is a limited partner. They don't deal with the day-to-day. They don't sign for debt. But the GP does the day-to-day. They manage, they sign for debt, they find the deal, they pay the bills. They pretty much do everything. And you guys sit back and you're hands off. Mighty Quinn, I think Mighty Quinn gets it. I don't know what I think he liked the discount and he likes the idea of an LP, I guess. I don't know. All right. So the returns are 20% for LPs to 80. No. Oh, what's up, Quinn? How you doing? No, so when we say the split is 80-20, 80% of the deal goes, well, it depends on, each deal is different. But as far as you're concerned, let me just clarify. 70% goes to the LP, which is you, the limited partner. And then 30% goes to the GPs, which is us who managing the actual deal. So for example, if the net for the year on that deal was, I don't know, $1 million in cash flow, then after all the expenses were paid, and let's say it was 500,000 left. Let's break it down into 100 for easy math. Out of $100,000 net, 70,000 would go to you, to the LPs, and you would break it up based on your percentage of ownership. So if you own 10% of that 70,000, right, because you had so much money invested, then you would get 7,000 of that because you own 10% of that. And then the remaining 30,000 would go to the GPs. Did that help you out there, Doreen? Okay. All
Okay.
right.
I think that was it. All right, cool. All right. Well,
Yeah, but feel
oh,
free
wait a
to
minute.
ask, and if you didn't want to share your question today.
Oh, no, Mike, it's another one. It says, is in the 25,000 is considered 10%?
No. So each share is worth about 25,000, and I forgot the number of shares. Let me count that up here. Hold on. So, let's say 5 million. I think that's what it is. 5 million divided by 25,000. So there's over 200 shares that we're selling for the Lion Capital. But don't look at it as that. The main concern for you is, regardless how much you put in, it doesn't matter, regardless how much you put in, you're going to average a 6 to 8% cash on cash as the project continues to grow. And then overall, you should make, at least you should double your money by the time we're finished with the fund, which will be 4 years, maybe. I think we got 4 years left on the fund, maybe 5. So if you invested in 25,000, you will actually own 1 share of the Lion Capital Fund. Okay.
So you all know some, so you can invest through a wire or Yeah, pretty much a wire. So once you complete the investment questionnaire process, then you'll be able to the wire information will be disclosed. It said, will we have ownership stakes in the Lion Capital Fund? So you'll have limited well, that's a question for you, Mike, but you'll have
Yeah,
limited.
no, I mean, they will have ownership in the Lion Capital Fund, and then the Lion Capital Fund would actually own additional assets. So because you bought shares in the Lion Capital Fund, you would actually have ownership indirectly of about 2 hotels and some apartments. And then in addition, if you guys are really trying to expand, not only are you making money, but you're kind of learning how all this project works. All right, Quinn got his answer there. All right. Any more questions? Guys, I hope this was very helpful. Oh, okay, here we go. Explain the qualifications for the accredited versus non-accredited qualification. Okay. Now, investor, I'm gonna explain a little bit here. Investor may have a little bit of difference, but for overall, for accredited and non-accredited, and so let's just do this. Accredited means you make at least $250,000 a year, or combined, you and a spouse make $250,000 or more a year, or you
House
have,
is 300,000.
oh, it's 300 now. Okay,
Yeah,
so it's 300, and or you have a net worth or of $1 million. There's also
including your primary residence.
yeah, and then there's also um, people which they call sophisticated investor, like a registered investment advisor or a financial advisor. They are now considering those accredited investors, even if they don't have the net worth um, or the net annual salary every year. They then would be considered an accredited investor. If you do not meet any of those standards that I just said, first of all, it is okay, but you are considered a non accredited investor. And again, that's not a problem either. It's just we're only allowed to take in so many non accredited investors into a deal. And it just means you have to sign paperwork disclosing that, explaining. It's not a problem at all. It's actually a great thing because you get to learn how to become, and because you begin to investing, you'll start building wealth and eventually move out of that non-accredited standard or qualification. What is the verification letter for accredited investors for non-accredited? Um, Now I don't know, Vesta, do you do that or we have to do that? So do we send them out to get their approval, or
The verification letter will come from your CPA. It will come from your financial advisors.
or do we have to send them out to what do you call it? To get verification online, like
Yeah, or to get
verify.
verification online.
Yeah, so we can get that. And again, like I said,
Or like I say, you can get it from your CPA or your license. It has to be a licensed financial advisor because they have to provide their FINRA. They have to provide their FINRA CRD number.
mhm, mhm, mhm. Is there a fee for a letter? It depends. If you're going to your CPA or your accountant or whoever your financial advisor, I don't know if they charge you. If we have to verify you, I think there's like a $25, $35 fee. But I'm not too worried about it. Like if that's something you want to do, like we'll we'll just if you pay for it and you move forward, I will credit it towards your share. You'll pay for the front, but I'll credit it towards your investment. Mm. All right. Josh, Battle, and Natalie, Skip, you guys are quiet over there. What's going on? Gina, come on. Bentley, what's happening over there? I see you. I see you. You ain't getting away from us. All right. Okay. Well, if there's no, oh, Skip came late. All right. Skip, you got any questions, or you want me to fill you in on anything? I have no problem here.
No,
We
what, and also the recording will also be on it'll be on the website within 24 hours as well. The pitch, so you can rewatch the video and then you can put the questions on the website, and then either Mike or someone from his team, they'll make sure they'll get the question, they'll make sure they get the answer for you.
Okay. All right. Well, we're going once, going twice. If you don't have any questions, I will get out of here and I'll start getting prepared here for this document. Okay, one. I think I'll check out the recording. Okay.
So what is the qualification for the non-financial? So if you are a accredited investor, based off of what Mike said, based off and this is not something that we came up with, it's something that the SEC came up with, meaning your income levels have to be over 200,000 or your net worth $1 million or more. You can't get around it. So yeah, unless you are an accredited investor, and I mean that's pretty much how you can invest in this fund. So the qualification for the non-financials, I'm not sure how long will the fund be available. Until July 31st, you'll have to invest.
So you need to save your spot, and then if you have, you're trying to transfer money, that's fine.
Yeah, so you can, like I said, accept wires, work with your CPA or financial advisor on as far as which way to go. Mike explained about the retirement and, different ways that they can invest. Can't they use like their retirement and stuff, Mike?
Yeah. I mean, I would like to know, like you can, so if you're going to use your retirement, I would use it if your retirement is not making money, right? Like if your retirement is continually, you got a 401k or some stocks that you have and it's just not performing, then yeah, I would roll it over into this fund where you can get a consistent return. But if it's performing and you feel like you can make your 8 to 12%, hey, leave that alone. Find some other money that's not working and put it into this deal. Okay. Any other questions? Oh, here we go. Okay, so how can we know the guidelines for both the non as well? I have a few other people interested in this. No, we take non-accredited. Look, I tell you what, if you got some people that are non-accredited, just or you don't think make 200,000 or have a net worth of $1 million, don't matter. I'll do a call with you guys individually, and we can put you guys together and get you started. Okay. So don't worry about it. If you want to invest, I'm gonna make sure that you can take a part of this opportunity. All right. All right. Okay. Okay, guys. Well, look, if you have any other questions, look, you can hit me on Vestor. You have my email. But let's get started. Don't wait till later. It's now o'clock. You remember, as we shared yesterday, those who wait, they get the lesser piece of the pie, right? McDonald's, the only reason they're doing so well because they were the first to the market, right? They got first to the spot. You got to get first to the spot and get into this opportunity. Someone said, when will the hotel condo be completed in Florida? That one, we're looking to break ground before the end of the year, and that'll take 18 to 24 months to build. So we're looking, and then also in that process, we've been receiving unsolicited offers to actually acquire our project now. So we may have a windfall here shortly. But I don't know. I mean, regardless, even if I sell, I want to keep some ownership because I like the hotel. Okay. All right, guys. Well, hey, thank you so much for your time. Congratulations on taking your first step to help building your retirement and changing, leaving a legacy for your family. All right. Hey, thank you so much for joining, and we'll talk soon. And by the way, if you like what you heard today and you feel it's of some value, please share it with your friends, share it with a family, share it with somebody that needs to help their retirement, or somebody who's got too much money and don't know what to do with it. We're here for you. All right. Thanks so much. Peace out.